Geodrill reported its 2024 financial results, reporting record revenues of $143 million, along with expanding gross margins, EBITDA margins, and net margins. The company is set for ambitious growth into new regions and into its existing regions. I'm Martin Gagel with Market Radius Research. It's Wednesday, March the 5th. Please remember this is neither a recommendation nor investment advice. Dave, great to have you back. Congratulations on a solid quarter, or excuse me, a solid year. 2024, really, things seem to come together. Why don't you give us an overview on what happened over the year, and then we can talk about some of the details.
Okay. Well, thank you. So 2024 was our strongest ever revenue in the history of this company. It was a good year. It was a transformative, transformational year for us, in which we pivoted away from certain jurisdictions to take better opportunities in other jurisdictions, and safer jurisdictions in other parts of the world. We had a good year in terms of top line. We had a very good year in terms of contract wins. And I will say that although it was a good year, 2024, we were still doing a lot of work towards the latter part of the year in terms of mobilizing and getting started on those new contracts. And so, not to sound too cliche-ish, but my point is, if you like 2024 numbers, then you're going to love 2025. Let's take just a quick look at how things played out. This looks at fiscal 23 and 2024, and you can see we had a nice 10% year-over-year improvement there. EBITDA was solid. It was up 50% more or less year over year, and earnings were very strong, about 20 cents USD and 20 US cents in earnings. So we generated strong cash from our operations, and this enabled us to do something really interesting, and that was to expand our rig fleet. We actually had our biggest expansionary CapEx year in the history of this company. We actually reinvested back into the business, just north of $20 million. That's our biggest ever that we've ever put back into the business. And the reason we're doing that is we're just completely inundated in South America. We're completely inundated in Egypt, and of course our West African markets, the three markets that we operate in, three key markets, Ghana, Ivory Coast, and Senegal, probably the best three markets in West Africa, continue to see a rise in demand, and this is on the back of a very, very strong gold price. Looking forward, what are we looking at in 2025? Analysts at this point in time are suggesting that we will do about 150, call it 5, and 154, just shy of 155. They've got us there for 32 US million in EBITDA, and they say we'll do about 12 million USD in net earnings. I will say at this point in time, we are very comfortable with those projections. That's about all I can say at this point in time, is we're very, very comfortable. What I'd just like to point out is that, whilst 2024 was a good year, I'm just going to take you quickly into a slide that we'll be presenting here later on today at a conference that I'm at. And this is it takes a snapshot of our 12 years, most recent years of growth. So now that 2024 is a wrap, and we can wind the numbers back to 2023, we can look at our four most recent years, being 21 to 24. Averagely, we did $130 million US in revenue. Now, things don't go up in a straight line. You appreciate. And so I like to look at our growth in terms of 4-year cadence or waves, where not each year exceeds the next year, but then by the time the next 4 years comes, we start with a new high, and then that becomes the low point of the next 4 years, if that makes any sense. And so at this point, we can look, if we look at this from the point of, to understand the past is to foresee the future. We can look at the last 4 years as 130. Take the 4 years back before that, 2017 to 2020, we're in the 80s, 80 millions. And we go back the 4 years before that, and we were doing 50 million in revenue averagely. So I call them the 50s, the 80s, and the 130s. Now, my point being, You don't need to be a mathematician. You don't need to be Nostradamus to know that this is just going to continue growing, and that's going to continue growing. And I can say that with some confidence because we are in the early stages now, 2025, and already utilization is at 75%. 75% of the fleet is utilized.
Dave, I'm looking at this slide here, and normally companies and presenters adjust the scales when comparing things to their benefit, but I think you actually put it a little bit to your detriment. On the right side, you've got rigs, and on the left side, you've got revenues going from 0 to 150, then on the right, 0 to 100 rigs. If you scaled them both to, let's say, the top was 150 rigs, you wouldn't have gotten to. The revenue slope would be way steeper than the rig slope, implying, I believe, if I'm getting my math here right, that your revenues per rigs have increased dramatically over these past 10 years.
Yeah.
And anyways, I just like they're not running like they're running uniformly. It's linearly, but it looks like the revenues per rigs have increased about like 50%, but it's hard to tell given the scales. Am I kind of getting it right here?
Well, I think if you look at 2013 through 14, 15, 16, those they were challenging years for the industry. They were challenging years for us. But my point is that we we survived and we thrived and we generated free cash that enabled us to take the rig fleet from 46 at 2016 up to 58, which enabled us to take it the following year to 64 and 67 and 68 and so on. Each and every year, this is all we've ever done, is reinvested in the business. There's never any free cash at Geodrill. Investors often ask, what is the best use of our cash? Should we be buying back our stock? Should we be paying dividends? And the answer to the question is really quite simple. You cannot get a better investment than this. Each and every rig that we add to the fleet increases our revenues by $1.5 million in revenue per rig, averagely. And
I
if you
would
look at
think that
gross margins of high 20, call it 28, 27, 28, 9%, then that implies that the payback on $1.5 million rig is more or less 3.5 to 4 years. That's a pretty good investment.
yeah.
So we're investing in ourselves. We always have.
Yeah. Given the growth that you had, you were able to expand your margins and keep your SG&A at, I believe it was 12% or so. So are you, is there room to expand your margins? Because you expanded them generally this year. How much more room for margin expansion is there on your growing revenue line?
It's actually improving. We're in probably what I would deem as we're coming into a, kind of a driller's market. Resource prices are as strong as they've ever been. Gold is knocking on the door of $3,000 an ounce. Copper is very strong. Everywhere you look in the world, people can't get enough of anything, whether it's lithium or EV metals. Rare earths is the one that's, in the news a lot lately. And could we expand our margin? Yes, but I think we've also got to be mindful that, and these are, we have loyal customers, and we have to just be mindful that, we're not trying to kill the pig here. We're just trying to provide a drilling service, make a profit, and grow the business.
Well, I just meant by expand your margins through scale. The bigger you get, maybe the more efficient you get. That's sort of a thing.
Really, really good point, because the greater amount of rigs and the greater amount of revenue, you get to defray, your SG&A doesn't go up in lockstep with your cogs. And so you naturally become more profitable as more rigs hit the field. Yeah. I get your point.
All right. In terms of your growth, you've also announced that you have plans for Saudi Arabia, and which that does not come on the top of my list, as mining jurisdictions are obviously known for some other resources they have there. And you've opened, and that, I guess, when you start off in a new district, there's some upfront costs you have to put in. Tell us where you're at on that. In what sort of markets do you expect to grow? And what your investment and what will it take investment wise and time wise to sort of establish and grow that business?
So the Kingdom of Saudi Arabia is well known for oil production, and that has been the case for 50 or more years. More recently, they see the need to divest away from, you know, it's a, prospectively speaking, the area is mineral rich. It shares the same geography as the Nubian Shield in Egypt, which is just across the Red Sea. We've had a great experience since we entered Egypt a few years ago. We're really loving the experience of working in North Africa or the Middle East, however you want to term it. It's actually technically North Africa. And we believe that the time is right for us, and we're getting a lot of inquiries. Folks are, there's a new kid in town, and it's called Geodrill, and folks are pretty happy with the name and the service that we provide. And so the inquiries have expanded beyond just Egypt. The inquiries have expanded into Saudi Arabia, and so we saw the need to potentially service that market, and that begins with the registering of a company. You can't operate there unless you're fully registered, and the registration is a process in itself. And so we've been working on that for a good year, almost 2 years. That process is now done, and we're ready to take those inquiries and bid tender work in the Kingdom of Saudi Arabia. And we're looking, history repeats itself, and technically, in theory, we should be successful, and that could become a new market for growth for us. And
Is it gold mining that you're focused on? I have no idea what they
it
mine in
is
Saudi Arabia.
well, in Saudi, it's gold copper. It's gold copper.
Okay.
Yeah, and there's some
All right.
big mines there. There's some big mining operations there. We just don't
Okay.
we're just not in our kind of space, but you just got to follow the big names. Who's moving into Saudi? Parakan, Mahadan, some of the biggest mining companies in the world are entering Saudi, and so we're really just going on the coattails of our potential customers or our existing customers that could be potentially our customers in the Kingdom of Saudi Arabia. Yeah.
All right.
Mm.
You've announced
This
you've
is our
got a
map.
good.
This is our map that we're just looking at here. Where we operate. West Africa continues to keep us very, very busy.
Yeah.
Ivory Coast busy, Ghana busy, Senegal. We're having a great experience in Senegal at the moment. South America just continues to grow. We're drilling for ATEX, we're drilling for Antofagasta for First Quantum, we're drilling for Capstone, we're drilling for a small junior in Peru. So we couldn't be happier with what's happening in South America at the moment, and that's where we're focusing an enormous amount of our attention is on our growth, satisfying our customer demand down there, and also Egypt. We're looking at positioning some more rigs into the Egyptian market, and of course, as we've discussed, the Saudi market.
Could you talk about your backlog a little bit, and as well, what I'm curious about the competitive environment when you're bidding on contracts? Are you bidding against sort of the like global players, or are these smaller regional operators? Talk about the competitive environment for new contracts that you're going after and winning.
Well, competition and drilling just seem to be two words that just fit nicely into the same sentence, always have and always will. There will always be competition. Our competition comes in the form of smaller, local, family-owned, mum and pop type drillers. And that's really when you're drilling in the junior space, which we don't do a lot of these days. We've done a really good job, I think, of repositioning ourselves away from the junior exploration market, customers that were beholden to the capital markets, to the tier one miners, the cash producing miners. And so in that league, it's a different ball game. You're dealing with the big guys. You've got Board Longyear Major Drilling, Capital Drilling, Farako Drilling. Just about anything that ends in drilling is there. They'll turn up and they're always on the bid. So it's a very competitive environment, but we thrive. We always thrive in a competitive environment. We like competition. We think it's a good thing. It's a very good thing. Keeps everyone on their toes, keeps everyone honest.
All right.
And as an industry, we have to continue to just, every day get better at what we do, so that we can continue to service our customers, and therefore the industry continues to move forward as it should.
All
Yeah.
right.
Mm.
With your growth, you're at with your rig count, and you said how much you discussed the amount you've invested in that. Should we see that continuing addition of rig count, or it was this sort of you build a bit, you build a lot, and then you take a pause and digest it and grow the business, and then maybe you wait a year or two before you start ramping up the other, adding additional drill rigs, or should we expect this kind of growth to continue on the drill rig side?
Yeah, so it's always going to be the answer. Good question, and the answer is always going to be in demand, in response to the demand. And there's no point in buying rigs and they sit there as ornaments, just because maybe you bought them at a deal or whatever. We only buy and we only expand when we have immediate demand. Typically, what happens is historically the company gets to 70% utilization. We just look at our cash balance and figure out what we need to do to satisfy the demand. That might be some big multi-purpose rigs. It could be some grade control rigs. Might be some underground rigs. At this point in time, we ended the year with 93 rigs. That was solid. But I'm happy to tell you at this point in time that program has not stopped. It's continued unabated as we enter 2025. We are continuing to add rigs, and so I think the intention is, we are moving inexorably in the direction of 100 rigs, and sometime rather sooner rather than later, I suggest we will reach that 100 rigs, and we'll just continue in response to demand, as and when our customers ask us to continue to, service them. Yeah. So.
All right. With your growth, you're acquiring rigs and building that out. Is there any M&A potential where you could maybe acquire some of these smaller operators and use their people in the rigs and so forth, or are you just, and I don't know if or when you've ever done any M&A, or are you just going to stay on your current path of organic growth?
We're builders, we're not buyers, and there's a good reason for that. Firstly, with drilling, two things. One thing is when you buy someone else's business, you acquire a fleet of rigs, probably a used fleet, maybe not necessarily going to be standard to the fleet that you have. And so if you do an acquisition and another acquisition, you actually end up with a motley bunch of equipment. Now, I think drilling and motley are two words that shouldn't be used in the same sentence. It's usually a fool's errand to grow for the sake of growth, just because you can, and just because you might be in a position, if you're one of those big drillers that commands a higher multiple, if you command a multiple of 4.5, 5 times EBITDA, you might be able to buy a smaller guy for 3.5 times EBITDA. And I get the whole thing that it's accretive, but we've never had that luxury, unfortunately. Geodrill seems to have always been considered the West African driller, and therefore commands a lesser multiple than some of our bigger peers. There's also the argument that we're small, but we're not that small anymore. We're now approaching $150 million in revenue. And if you do the math, from where we ended up in 2024, add 10%, 10%, 10%, you're going to end up with $200 million by the time we've finished this next 4-year cadence, you see. I don't think that's that small. And the other point is, if you look at our margins on that sort of revenue, that would be similar to one of our competitors that would be generating twice that revenue. Do you see my point? So I don't think, the little guy argument does start to fall away somewhat. The other thing is, I think we've done some pretty good work when it comes to geographical diversification. We have, we're slowly but surely moving the fleet more in a direction away from West Africa, which the market, for one reason, correctly or incorrectly, deems as being not the place to be. I would argue that West Africa is actually where you want to be, because It's where all the gold's coming from. 450 metric ton is being mined out of West Africa. That's the official number per year. There's only 330 metric ton coming out of China, which is the largest single producer in the world. So West Africa is actually, we've got to be in West Africa. And we'll always be in West Africa. But our investors would like us to have, operations in South America. And it makes sense because there we don't drill for gold. We drill for copper. We drill for other things. So it gives us commodity diversification and also gives us geographical diversification. So that's a good thing. And folks see it as a safer jurisdiction. And Egypt, is really not really Africa. It's more Middle East. And it's a really great place to be doing business. So at what point will our analysts look at us and say, well, maybe we shouldn't be looking at these guys at a 3.5 times multiple now. We should be probably looking at them and saying, well, in the peer group, where 4.5 might be the high and 3 may be the low, maybe we should give these guys a 3.5 or a 4. I would think that wouldn't be unreasonable at all. So it actually brings us to my slide, which you're looking at here at the moment. Geodrill continues to trade at a just shy of a 3 times 2025 consensus EBITDA. So what happens if we shoot the lights out in 2025? Well, that'll be interesting to see. And I think, you'll just have to, wait as the quarters continue to roll through, the next one of which you will see in May when we announce our Q1. And I think that'll be a good leading indicator whether that valuation, where we're currently valued at, I think, $3.54. I think our analysts are going to probably be compelled to look at that and have to give us a re-rate. But then that remains to be seen. As I said, you'll have to wait, see what happens when we announce our Q1. The other point I think I'd just like to make, if I may, is how we performed in the last year. Geodrill outperformed gold, and we outperformed the S&P. We also outperformed the NASDAQ, and we outperformed the Dow. So it's been a great investment if you got on to this story a year ago. And I will tell you that our best work actually lies ahead of us. It's not actually 2024. 2024 was an okay year. But look, we had a slow start in Q1. We didn't have a fantastic Q4. Gee whiz, 2025 it's really off to a solid start. As I say, 75% utilization, and we've only just seen we're at the tail end of February, and that's on the enlarged fleet.
With you always had to deal with the seasonality in West Africa from the rainy season and so forth. I don't think there's a big rainy season in Egypt, and South America has very different weather, I think uncorrelated to West Africa. Are we going to see some smoothing out of your seasonality going forward? Do the different regions sort of offset each other?
Yeah, the regions that, as I said, it's been a transformational year for us in which we've actually pivoted away from certain jurisdictions for better opportunities and other. And one of the things that was concerning us, we were in Burkina Faso and in Mali, was seasonality. In the wet season, those markets essentially stop. We're no longer in those markets, and we're in markets that will not be affected by that seasonality. So I'm expecting we'll see a flattening in the Q3s and Q4s. Whereas we normally have a very a solid Q1 and an even more solid Q2, then it tends to drop in 3 and 4. I think what it'll probably do in Q3 and 4 this year is should flatline. Yeah.
Interesting. Okay. So even Burkina Faso and Mali,
we'll had as we enter 26, that kind of comes in, and the rigs come in for a bit of work after the Christmas break, and then it all starts again. And then, the new rigs that have been built during the year hit the field, new contracts are signed, new Royal contracts are started, and it all becomes a new year. So Q1 is always is a good indicator of how the rest of the year is going to play out. As I say, keep an eye on that Q1. That'll come out in May. Yeah.
All right. And And shooting the lights out, basically, you're going to be adding more rigs, it sounds like, and then with 75% utilization rates, you get a lot better margins and utilization, which drives margins and revenues. Is that what sort of makes for a shoot the lights out year?
Yeah.
Okay.
Yeah, and it's going to be one. You're spot on.
All right. To change the topic a bit here to the United States and President Trump, he's doing a lot of things. Given that you're operating in not North America and sort of domestic domestic economies, you're not an exporter or anything. Are there any direct or indirect, maybe through the price of gold, given the global volatility? Is there anything directly that investors should be concerned about, or that Trump could impact your operations?
Look, there's nothing that comes to mind. I mean, the point I would make is that what the market is telling us at this point in time is that the reserve currency is not the US dollar, it's gold. Okay. Gold has just about outperformed everything in 2024. Only thing it hasn't actually outperformed is us. I don't think there'd probably be some AI stories out there. But the world is telling us that gold is the new game, and the world just cannot seem to get enough of the stuff at the moment. I don't know if you're familiar, but Costco have actually got vending machines, like chocolate machines or cigarette machines, where you used to go and buy a chocolate bar. You can actually now walk into a Costco, put in your debit card, take out a 1/4 ounce of gold or 5 grams or whatever. Kudos to them. And the point that I find is very, very interesting is they can't keep enough gold up to these things. They cannot keep enough gold up to these things. So what is that telling us? The other big thing that's going on, so I think 80% of the work we do is gold. So how do you invest in gold? You can buy gold bars, go to Costco. You can buy gold ETFs. There's a GLD. We outperformed them too, by the way. Or you can buy gold mining companies, and you should, because they're our customers, and we love that you do that, because ultimately we end up deriving benefiting by the drilling. But if you want to take away all the risk and just make a simple thing, buy the picks and shovels. There's an old saying, in a gold rush, you back the guy who sells the picks and shovels. Now, drillers, be it Geodrill, be it Major Drilling, be it all the drillers, are the proverbial gold picks and shovels. And why is that so? It's because the drillers speak for 50% of all exploration budgets. Approximately 50% of all the money that's raised for all junior exploration companies, and 50% of the budgets that mining companies put aside for their depletion drilling and their definition drilling goes to drillers. So a great way to play the space is back the drillers. And, on a quarterly basis, you'll know what your numbers are. You don't have to spend 10 years developing a project, find out whether it's in the jurisdiction or not. You can buy it when the train pulls up and the stock's selling at $2.50, and you can, quarterly results, good results, and the stock goes up to $2.75, and you can jump out, you can jump back in, you can jump back out, you can jump back in just on the strength of on quarterly news. So they're a great way to play the space. But I'm certainly not for 1 minute trying to detract investors from investing in the mining industry. The mining industry is the most overlooked, most deeply valued industry. It's where people should be putting their money at the moment. But there's an enormous amount of money that would normally make its way into junior exploration companies that's making its way into the next shiny thing, which happens to be cryptocurrencies. I'm not trying to talk anyone out of cryptocurrencies. I know people that have made a lot of money out of cryptocurrencies, and good luck to them. I don't personally, but I would never try and convince anyone how to invest their money. The only thing I would say is this: a balanced approach to your portfolio is always best. You probably want to be in a basket of different things, and a good way to play this market in these challenging times that we're in You probably want some gold mining companies. You probably want some junior exploration companies. And for what it's worth, maybe throw a couple of drillers in there as well. And if you do that, you're
All
probably
right.
going to consider what I consider to be one of the best drilling companies in the world. And that is, of course, Geodrill.
Right. Dave, we covered a lot here. That's great. We should wrap things up. Any final comments before we call it a day here?
No, no, in gold we trust.
Gold we trust. All right. You can buy the gold, the gold miners, or the gold drillers. So it's a ways to play that and agree with your diversified portfolio thesis. Dave, thank you very much. Always a lot of fun chatting with you. Congrats on a good year. I'm really looking forward to how 2025 is going to shape up here. Talk to you soon.
Cheers, man. Thank you very much. Good luck.